AI's predicted surges. Number 3 ARM Holdings plus 69.58%. Number 2 Samsung Electromechanics plus 86.54%. What is the number 1 stock? Check it right now. Number 10. Symbotic, Logistics Robot Sector. Symbotic, SYM, operating within the logistics robotics sector, has shown recent market underperformance relative to broader indices. However, a deeper quantitative assessment indicates a potential disconnect between current valuation and underlying fundamentals. Strategic client partnerships, alongside robust cash flow generation, suggest an undervaluation scenario. Based on our predictive models, Symbotic exhibits a 15-day estimated return of positive 12.7%. Recent headlines indicate Symbotic underperformed the broader market, experiencing a dip. Conversely, some analyses suggest SYM could be significantly undervalued, potentially by over 30%, following its recent guidance update and a substantial Walmart deal. Furthermore, strong cash flow is highlighted as a catalyst for a potential stock re-rating. Number 9. Micron, Memory Semi-Sector. Micron, within the memory semi-sector, presents a notable profile. Our analysis focuses on 4 decisive indicators. The moving average signals a clear upward trend, complemented by a neutral RSI at 54.1, indicating sustained momentum without overextension. Conversely, on-balance volume points to sell-side dominance and notable divergence. Critically, current volatility stands at 0%, suggesting extreme price compression. Synthesizing these signals, our model forecasts a 15-day estimated return of plus 13.3%. Market trends indicate a potential inflection point for memory semiconductors. Despite internal indicator divergences, the underlying sector strength and Micron's current price stability suggest a significant directional shift is imminent. Investors should monitor this evolving situation closely. Number 8. LG Innotek, Optical Parts Sector. LG Innotek, operating within the optical parts sector, demonstrates robust upward momentum. Recent catalysts include a confirmed European auto parts agreement, propelling shares to a new record high. Institutional interest is evident through its inclusion in various ETFs. Furthermore, broader LG Group optimism, fueled by potential AI partnership discussions with NVIDIA, provides additional systemic support. Based on current quantitative models, a 15-day return of positive 13.8% is projected. Recent news highlights significant positive developments for LG Innotek. The company's shares have hit a new record high following a key European auto parts deal. It's also garnering attention from ETFs, indicating strong institutional investment interest. This positive sentiment is further boosted by broader LG Group talks regarding potential AI collaborations with NVIDIA. Number 7. Samsung SDI, Battery Sector. Samsung SDI's operational resilience is noteworthy. While broader Asian tech indices registered declines following Broadcom's market impact, Samsung SDI posted a smaller than expected loss, indicating controlled operational execution. Furthermore, the strategic joint evaluation agreement with BMW for solid-state battery validation reinforces its technological competitive edge and future growth trajectory. Based on current quantitative metrics, a 15-day estimated return of plus 14.0% is projected. Asian tech stocks are broadly down following Broadcom's market impact. However, Samsung SDI has delivered positive news, reporting a smaller than expected loss. Additionally, the company has entered a significant battery validation agreement with BMW. Number 6. Samsung Electronics, HBM Sector. Samsung Electronics, within the HBM sector, is currently navigating significant market turbulence. Regulatory warnings concerning leveraged ETFs tied to Samsung and SK Hynix suggest an attempt to cool speculative activity, potentially impacting trading dynamics. Furthermore, both entities are experiencing profit-taking, contributing to a broader 10% crash in South Korean tech stocks. Despite these immediate systemic and stock-specific pressures, our quantitative models project a 15-day estimated return of plus 15.5%. South Korean tech, including Samsung and SK Hynix, is under pressure. Regulators are blasting leveraged ETFs tied to these firms, citing brokerage windfalls. This comes as both companies see profit-taking, contributing to a significant 10% crash across the broader South Korean tech market. Number 5. Supermicro, AI Server Sector. Supermicro, a core component of the AI server infrastructure, is experiencing amplified valuation metrics. This upward trajectory is fundamentally driven by sustained demand in AI compute and strategic industry collaborations, particularly with NVIDIA. quantitative models indicate a projected 15-day estimated return of plus 29.1%. Market reports highlight Supermicro's strongest performance in a year, directly attributed to its NVIDIA partnership. Media outlets like CNBC are flagging Supermicro among key AI stocks, anticipating significant market moves, reflecting today's substantial price gains. Number 4. SanDisk, Flash Memory Sector. SanDisk, ticker SNDK, a key component of the flash memory sector. Our proprietary quantitative models indicate substantial positive momentum. Based on current market dynamics and sector-specific catalysts, the projected 15-day return for SanDisk is estimated at positive 31.7%. SanDisk shares are soaring today, gaining 5% and joining Micron and Western Digital in a broader memory stock rally ahead of Micron's upcoming earnings report. This surge reflects strong market sentiment, further bolstered by SanDisk's position as a top holding in the GFLW ETF. Number 3. ARM Holdings, IP Design Sector. ARM Holdings, within the IP design sector, demonstrates significant price volatility, reflecting high speculative interest. Recent data indicates an 11% intraday gain, contrasting a 4.11% decline on June 22. Our quantitative models, accounting for these dynamics, project a 15-day return of plus 69.6%. News concerning ARM Holdings is currently mixed. While the stock saw an 11% surge today, it also experienced a 4.11% dip on June 22. Reports debate its current buying appeal and speculate on its trajectory through 2026. Number 2. Samsung Electro-Mechanics, Electronic Parts Sector. Samsung Electro-Mechanics, within the electronic parts sector, presents a contradictory profile. The company forecasts an aggressive 110% operating profit growth next year, leading to a raised target price. However, the broader South Korean market is experiencing a significant 10% crash driven by a massive tech sector sell-off. Further, the National Pension Service, a major institutional investor, has notably divested from Samsung Electro-Mechanics as part of a recent $920 million stock sell-off. Despite these substantial market headwinds and institutional selling pressure, the algorithmic 15-day estimated return for Samsung Electro-Mechanics is calculated at plus 86.5%. South Korean stocks have experienced a significant 10% crash, driven by a broad tech sector sell-off. While Samsung Electro-Mechanics forecasts over 100% operating profit growth next year, the National Pension Service has notably sold off its holdings in the company. Number 1. Jusung Engineering, Deposition Equip Sector. Jusung Engineering, a deposition equipment sector component, demonstrates robust upward momentum. Market analysis attributes recent surges, including a 22% increase, to confirmed ALG semiconductor equipment shipments. The stock's performance is a primary driver for Kosdaq's positive trajectory. Quantitative models project a 15-day estimated return of plus 95.6%. Jusung Engineering shares surged today, driven by reports of ALG semiconductor equipment shipments. The company's strong performance was a significant factor in the Kosdaq market turning positive, highlighting its influential market position. Powered by the top-ranked AI Ensemble model, we analyzed 7 major indicators like OBV and RSI through Tech and Quant to bring you these rankings, completed with reinforcement learning. See you again at this time tomorrow.